How to turn a small Forex account into a bigger one. The truth about small accounts. What if I told you, the size of your trading account isn't the biggest reason you're not making money? Most traders believe they need a bigger account. They think, if I only had $10,000, I'd finally become profitable. But here's the uncomfortable truth. If you can't consistently grow a $100 account, a $10,000 account won't magically solve your problems. In fact, you'll probably lose it faster. Because the market doesn't reward account size, it rewards discipline. And that's the lesson most traders learn too late. Every day, thousands of beginners open a Forex account with high hopes. Some deposit $50, some $100, some $500, some even more. They all have the same dream, to grow a small account into financial freedom. But after a few weeks, most accounts are empty. Not because the market was impossible, not because the broker cheated them, but because they believed one dangerous lie. They believed small accounts require big risks. Nothing could be further from the truth. Let's imagine two traders. Both start with $200. Trader wants to become rich as quickly as possible. He risks 20% of his account on every trade. When he wins, he feels unstoppable. When he loses, he doubles his position size to recover. Within days, his account is gone. Now meet Trader B. He also starts with $200. But his mindset is completely different. He understands something important. His first goal isn't making money. His first goal is protecting capital. He risks only a small percentage of his account on each trade. Some days he wins, some days he loses, but month after month, his account slowly grows. Not because he's lucky, because he's consistent. One of the biggest mistakes beginners make is expecting unrealistic returns. They see screenshots online. People claiming to turn $100 into $10,000 in a month. They begin believing that's normal. It's not. Sometimes people do have extraordinary gains, but those results usually come with extraordinary risk. And the same level of risk can wipe out an account just as quickly. Professional traders don't chase explosive growth. They build sustainable growth. Because keeping your account alive is what allows compounding to work. Now let's talk about compounding. Compounding is one of the most powerful concepts in trading. Imagine your account grows a little over time. Instead of withdrawing every profit, you allow your account size to increase. As your account grows, the same percentage gain produces larger dollar profits. Growth begins slowly, then it gradually accelerates. The important point is this. Compounding only works if you protect your capital. If you keep blowing accounts, compounding never has a chance. Here's another mistake. Many traders think, a small account isn't enough, so I'll use huge lot sizes. That thinking creates emotional trading. Every small movement feels enormous. Fear increases. Greed increases. Discipline disappears. The market hasn't changed. Your emotions have. Professional traders understand something beginners often ignore. Risk is more important than reward, because if you lose your account, there are no future opportunities. Ask yourself this question. If someone handed you a $50,000 funded account today, would your habits suddenly become disciplined? Or would you trade exactly the same way you trade now? That's the real test. Your current habits will follow you into every account size, which means, if you want a bigger account, you first need bigger discipline. Here's a mindset shift that changed the careers of many successful traders. Stop asking, how can I make more money? Instead ask, how can I become a trader who deserves a bigger account? Those are two completely different questions. One focuses on money, the other focuses on skill. And skill is what creates lasting profits. A small trading account isn't a limitation, it's a training ground. It's where you learn patience, discipline, risk management, emotional control. Master those skills on a small account, and you'll be prepared when your account becomes much larger. Ignore those skills, and no amount of money will save you. Because profitable trading doesn't begin with a bigger balance, it begins with a better mindset. Part 2. The blueprint for growing a small account safely. Now that you understand why most small trading accounts fail, let's talk about how successful traders approach them. Because growing a small account isn't about finding a magical strategy, it's about following a process. A process that's boring, a process that's slow, but a process that actually works. The first thing you need to understand is this. Your account is a business. Imagine opening a restaurant. Would you spend all your money on the first day hoping customers show up? Of course not. You'd protect your capital. You'd manage your expenses. You'd think long-term. Trading deserves the same mindset. Your account is your business. Every dollar inside it is your business capital. Protect it first. Grow it second. Step 1. Risk small. Here's one of the biggest mistakes beginners make. They think, my account is small, so I have to risk big to make meaningful money. It sounds logical. But it's exactly the opposite of what professionals do. Let's compare two traders with a $500 account. The first trader risks 20% on every trade. A few losses later, nearly half the account is gone. Now every decision feels emotional. Fear takes over. The second trader risks only a small percentage on each trade. Even after several losses, most of the account is still intact. That trader has something the first trader doesn't. Time. And in trading, time is one of your greatest advantages. Step 2. Focus on percentages, not dollars. This mindset changes everything. Many beginners constantly think, I only made $8 today. Or, I only made $15 this week. They become disappointed. But professionals ask a different question. Did I follow my plan? Did I manage my risk correctly? Did I grow my account consistently? When your account is small, dollar profits will naturally be small. That's normal. What's important is building consistent percentage returns while managing risk responsibly. As your account grows, those percentages represent larger amounts. Step 3. Never chase losses. Imagine you lose 2 trades in a row. Your account is down. Now your emotions start talking. I need to get my money back today. That's one of the most dangerous thoughts in trading. Because once recovery becomes your goal, discipline usually disappears. You increase your lot size. You take trades that don't match your strategy. You stop thinking logically. Professional traders never chase losses. They simply wait for the next quality opportunity. Because they know one bad decision can erase weeks of progress. Step 4. Master one strategy. One reason small accounts struggle is constant strategy hopping. Monday, you're trading breakouts. Tuesday, you're trading supply and demand. Wednesday, you're trying SET concepts. Thursday, you're following someone else's signals. Friday, you're completely confused. Every strategy experiences losing trades. Changing systems after every loss prevents you from learning whether a strategy actually has an edge. Professionals don't master 10 strategies. They master one, then they execute it consistently. Step 5. Patience creates opportunity. The market opens every week. There will always be another setup. But beginners often feel pressure to trade every day, sometimes even every hour. That's not trading, that's forcing action. Imagine a fisherman. He doesn't jump into the water because fish aren't biting. He waits. Trading is no different. Patience isn't wasted time, it's part of the strategy. The power of compounding. Now let's return to one of the most powerful ideas in trading, compounding. Imagine your account grows gradually over time. Instead of increasing risk dramatically, you allow your position size to increase naturally as your account grows. Growth begins slowly. Then, as your account becomes larger, the same percentage gains have a bigger impact. Compounding rewards consistency, not recklessness. That's why protecting your account matters so much. You can't compound an account that's been wiped out. Stop comparing yourself. One of the fastest ways to destroy your confidence is comparing your journey to someone else's screenshots. Social media often shows winning trades, huge profits, luxury lifestyles. But it rarely shows the losing streaks, the emotional struggles, the years of practice. Focus on your own progress. If you're more disciplined today than you were last month, you're moving in the right direction. Growing a small Forex account isn't about making one incredible trade. It's about making hundreds of disciplined decisions, risking responsibly, following your strategy, protecting your capital, and allowing consistency to do the heavy lifting. The traders who succeed aren't always the smartest. They're the ones who stay in the game long enough for their edge to work. Part 3. The 5 mistakes that keep small accounts small. At this point, you know that growing a small Forex account isn't about luck. It's about discipline. But if that's true, why do so many traders stay stuck? Why do they deposit money, lose it, deposit again, and repeat the same cycle for years? The answer is simple. They keep making the same mistakes, and today, we're going to expose the 5 biggest mistakes that silently destroy small trading accounts. If you can eliminate these habits, you'll already be ahead of most traders. Mistake number 1, over-leveraging. Let's start with the biggest account killer, over-leveraging. This happens when a trader opens a position that's far too large for their account. Why? Because they want fast profits. Imagine you have a small account. Instead of risking a small amount, you open a massive position. At first, everything feels exciting. A small move in your favor creates a large profit. You feel like you've discovered a shortcut. But then, the market moves against you. Now that same leverage works against you. A tiny market movement creates a huge loss. Your emotions explode, fear takes over, and before you know it, weeks of progress disappear in minutes. Professionals don't use leverage to gamble. They use it carefully, with a clear risk plan. Leverage is a tool. Used wisely, it can help. Used recklessly, it can destroy an account. Mistake number 2, overtrading. Many beginners believe that more trades mean more profits. But that's not how trading works. Imagine a hunter. Would a hunter fire at every movement in the forest? No. He waits for the right target. Trading is exactly the same. Every unnecessary trade increases risk. Every emotional trade reduces discipline. Some of the best trading days are the days when you place no trades at all. Professional traders understand that patience is profitable. They don't trade because they're bored. They trade because the market gives them a valid opportunity. Mistake number 3, expecting to get rich quickly. Let's be honest. Most people enter Forex because they want financial freedom. There's nothing wrong with that. The problem begins when they expect it to happen overnight. They watch videos claiming someone turned a tiny account into a fortune in just a few weeks. They begin chasing impossible results. So they risk too much, trade too often, ignore their rules. Eventually, their account disappears. Here's the truth. Building a trading career is like building a house. You don't start with the roof. You build a strong foundation first. The traders who stay patient usually stay profitable longer. Mistake number 4, trading with emotion. Imagine this. You lose 2 trades. Now you're frustrated. The next setup appears. Instead of following your plan, you're thinking about recovering your losses. Your emotions have taken control, or maybe you win 3 trades in a row. Now you feel unstoppable. You increase your position size. Again. Emotion is making the decision. Notice something. Fear and confidence can both become dangerous when they replace discipline. Professional traders don't allow emotions to decide. Their rules decide. Mistake number 5, ignoring your trading journal. Many traders never write anything down. They rely on memory. But memory is unreliable. Imagine a football coach who never reviews previous matches. How would the team improve? Trading is no different. Your journal reveals patterns. Maybe you lose money every time you trade late at night. Maybe your best trades happen during one specific session. Maybe impatience causes most of your losses. Without a journal, those lessons stay hidden. A trading journal isn't just a notebook. It's your personal coach. The cycle that traps beginners. Watch how these mistakes connect. A trader expects quick profits. So they over-leverage. The trade loses. They become emotional. Now they overtrade to recover. More losses follow. Instead of reviewing their mistakes, they deposit more money. The cycle begins again. This isn't a strategy problem. It's a behavior problem. And behavior can be changed. The winning alternative. Now imagine another trader. They risk responsibly. They wait for quality setups. They keep a trading journal. They accept losses calmly. They review every mistake. Their growth seems slow, but month after month, their account gets stronger, not because they found a secret strategy, because they stopped making the mistakes that destroy most traders. A question that can save your account. Before every trade, ask yourself this: am I trying to grow my account, or am I trying to satisfy my emotions? That one question can stop countless bad decisions. Because the market rewards discipline, not desperation. Every profitable trader has one thing in common. They learn to eliminate bad habits before chasing bigger profits. Because success in Forex isn't just about learning what to do. It's about stopping the things that quietly destroy your progress. The less mistakes you make, the more your account has a chance to grow. And sometimes, not losing, is the fastest path to winning. Part 4. The daily routine that grows small accounts. At this point, you understand that growing a small Forex account isn't about finding a perfect strategy. It's about making better decisions every single day. But here's the question: what do consistently profitable traders actually do every day? Do they spend 12 hours staring at charts? Do they trade every market movement? Do they constantly search for new indicators? No, in fact, their daily routine is surprisingly simple, and that's exactly why it works. Today, I'm going to walk you through the daily routine that many disciplined traders follow to grow small accounts steadily. Step 1. Start with the right mindset. Before you even open your trading platform, ask yourself one question: am I here to make money, or to follow my trading plan? Most beginners answer, I'm here to make money, and that's exactly why they struggle. Because when making money becomes the goal, every losing trade feels like failure. Every winning trade creates overconfidence. Emotions take control. Professional traders think differently. Their goal isn't to make money today. Their goal is to execute their plan perfectly. They know profits are the result of good decisions, not the purpose of every trade. Step 2. Check the economic calendar. Before looking at any chart, know what's happening in the market. Major news events can create sudden volatility: interest rate decisions, inflation reports, employment data, central bank speeches. You don't have to predict the news. You simply need to know when it's coming. Preparation reduces surprises, and prepared traders make calmer decisions. Step 3. Analyze, don't guess. Now it's time to open your charts. But don't rush into a trade. Look at the bigger picture first. Ask yourself, is the market trending or moving sideways? Where are the major support and resistance levels? Where is the nearest area of liquidity? What is the overall market structure? Professional traders don't force trades. They wait for the market to align with their plan. Analysis comes before execution, always. Step 4. Wait for your setup. This is where patience becomes your greatest advantage. Imagine sitting in front of your charts for 2 hours, and nothing happens. Most beginners become restless. They think, there must be something to trade, so they invent a setup. They convince themselves it's good enough. Then they enter. Minutes later, they're stopped out. Not because the market was unfair, because they traded out of boredom. Professional traders know something powerful. Every trade you don't take is just as important as the ones you do. Patience protects capital. Step 5. Manage the trade. Don't chase it. Your setup appears. Everything matches your plan. You enter. Now what? Most beginners stare at every candle. Every tiny movement creates emotion. They close early because they are afraid. Or they move their stop loss because they hope the market will turn around. Professionals don't do that. Once the trade is placed, they trust their plan. They let the market do its job. They've already accepted the risk before entering, so there's no need to panic during the trade. Step 6. Review every trade, whether the trade wins or loses. Your work isn't finished. Open your trading journal. Write down, why did I enter? Did I follow my strategy? Did I respect my stop loss? Did emotions influence my decisions? What can I improve next time? Winning trades can contain mistakes. Losing trades can be perfectly executed. Judge your performance by your discipline, not by the result of one trade. The weekend review. At the end of every week, review everything. How many trades did you take? How many followed your plan? What was your biggest mistake? What was your best decision? This habit transforms experience into improvement. Without review, mistakes repeat themselves. With review, mistakes become lessons. The difference between beginners and professionals. A beginner wakes up thinking, how much money can I make today? A professional wakes up thinking, can I follow my system today? That single mindset shift changes everything, because one focuses on outcomes, the other focuses on execution. And in trading, execution is what creates consistent outcomes over time. The secret most traders ignore. Here's something that might surprise you. The traders who grow small accounts consistently often have boring trading days, no excitement, no gambling, no chasing candles, just preparation, patience, execution, review, repeat. It may not look exciting on social media, but it builds something far more valuable: consistency. Growing a small account doesn't require extraordinary intelligence. It requires extraordinary consistency. The trader who follows the same disciplined routine every day will eventually outperform the trader who's constantly chasing shortcuts. Because success in Forex isn't built in one amazing trading session. It's built through hundreds of disciplined days, stacked one on top of another. So tomorrow morning, before you open your charts, remember this: your routine will shape your results. Choose your habits wisely. Part 5. The final blueprint. From a small account to long-term success. We've reached the final part of this documentary. Over the last 30 minutes, we've talked about mindset, risk management, discipline, daily routines, and the mistakes that keep small trading accounts from growing. Now it's time to put everything together, because here's the truth. Growing a small Forex account isn't about one incredible trade. It's about becoming the kind of trader who can grow any account. That's the real goal, not a bigger balance, a better trader. The 3 stages of every trader. Every successful trader goes through 3 stages. Stage 1, survival. This is where every beginner starts. You're learning, making mistakes, testing strategies, trying to understand the market. Your goal during this stage isn't to make a fortune. It's to protect your account while you gain experience. If you survive, you can improve. If you blow your account every month, you're constantly starting over. Survival comes first. Stage 2, consistency. After learning to survive, you begin following your rules more often. You stop chasing every trade. You accept losses without panic. Your journal starts showing fewer emotional mistakes. Some weeks are profitable, some weeks aren't. But something important has changed. Your behavior is becoming consistent. And consistent behavior eventually creates consistent results. Stage 3, growth. This is where many traders finally begin seeing steady progress. Not because they've discovered a secret strategy, but because they've become disciplined. Their account grows gradually. They don't rush. They don't gamble. They simply continue repeating the habits that brought them here. Growth becomes a consequence, not the goal. The magic of compounding. Let's imagine 2 traders. Both start with the same small account. Trader A tries to double the account every month. He takes huge risks. Sometimes he wins. Eventually, one bad week wipes out everything. Trader B grows the account steadily. He focuses on discipline. He protects capital. He allows compounding to work over time. After several years, Trader B has built something far more valuable, a sustainable trading career. That's the power of patience. Stop chasing fast money. The internet is full of people promising quick riches. Double your account in a week. Turn $100 into thousands overnight. Those stories attract attention, but they rarely teach good habits. Professional traders know that extraordinary returns usually require extraordinary risk. And extraordinary risk often leads to extraordinary losses. Your goal isn't to become rich this month. Your goal is to still be trading successfully years from now. The mindset that changes everything. Here's one question that can completely change your trading career. Instead of asking, how much money can I make? Ask, what would a professional trader do in this situation? Would a professional revenge trade? No. Would a professional risk half the account on one idea? No. Would a professional ignore a trading plan because of emotion? No. Every time you ask this question, you train your mind to think differently. And that's where transformation begins. Your biggest investment. Many people believe their biggest investment is the money they deposit into a trading account. It's not. Your biggest investment is yourself. The books you read, the charts you study, the mistakes you review, the habits you build. Money can disappear. Knowledge stays with you. That's why education always pays the highest long-term return. The 30-day challenge. Here's a challenge for you, for the next 30 days. Forget about trying to make a fortune. Instead, focus on these simple habits. Follow your trading plan on every trade. Respect every stop loss. Never revenge trade. Risk responsibly. Keep a trading journal. Review your performance every weekend. If you can do these 6 things consistently, you'll already be ahead of most traders. Because most traders don't fail from a lack of knowledge, they fail from a lack of discipline. Final message: if there's one lesson I hope you remember from this documentary, it's this: a small account doesn't limit your future. Your habits do. The market doesn't care how much money you start with. It rewards patience, preparation, discipline, and consistency. Master those qualities, and your account has the opportunity to grow. Ignore them, and even the largest account can disappear. Success in Forex isn't about becoming lucky. It's about becoming reliable. Reliable in your decisions, reliable in your risk management, reliable in following your own rules. When you become that trader, profits stop feeling like luck. They become the result of a repeatable process. If this documentary helped you see trading from a new perspective, then you've already taken an important step forward. Remember, your goal isn't to impress people with one big winning trade. Your goal is to build a trading career that lasts. If you enjoyed this video, subscribe to Mental Edge Trading for more documentaries on trading psychology, risk management, discipline, and professional trading habits. Leave a comment below and answer this question. If you started over with a small Forex account today, what is the one habit you would never break? I'd love to hear your answer. Thank you for watching. Stay patient, stay disciplined, protect your capital, and remember, small accounts don't become big overnight. They become big through thousands of smart decisions made one trade at a time.